Welcome to Phillip Roundtable. I'm Kim. The market has been very volatile of late, especially early August, where we witnessed a slew of meltdowns across all markets that we track, almost all markets that we track. I'm sure that investors will have questions or thoughts in their mind how they should position along this bumpy market. We are honored to have Mr. Teng Chi Siong, Director, Intermediary and Private Retirement Business from AHAM Asset Management Berhad, and Encik Muhammad Ridwan Jasmi, Chief Investment Officer from Maybank Islamic Asset Management, to share their thoughts with us. Allow me to introduce our speaker. Our first speaker is Mr. Teng Chi Siong. He's the Director, Intermediary and Private Retirement Business of AHAM Capital. His current designation sees him actively involved in driving business expansion, as well as managing relationships with the various distributors and business partners of the firm. He's also playing a key role in the strategic planning and development for the growth of AHAM Private Retirement Scheme business. Then joined AHAM Capital in May 2010, where he was pivotal in building and driving the growth of the personal wealth business team, as well as the expansion of the firm's retail and mass affluent business segment. Chiang graduated with a Bachelor of Arts honors degree in Business Administration from the University of Aberdeen, Dundee, United Kingdom, and is also a certified financial planner. Prior to joining AHAM Capital, he began his career in consumer financial services in the banking sector. Our second speaker is Encik Muhammad Ridwan Jasmi, the Chief Investment Officer of Maybank Islamic Asset Management. He was appointed as the CIO of Maybank Islamic Asset Management on 6 September 2021. He's responsible for overseeing investments across asset classes, together with a team of fund managers at MIAM with their respective responsibilities to manage and monitor investments, in particular managing pension and institutional funds. He was formerly the Director of Equities at CMB Principal Asset Management, and prior to that, Head of Sharia and Takaful Investment at Great Eastern Life Malaysia, and also Chief Investment Officer at Muamalat Invest. Ridwan has 20 years of experience in fund management, insurance, and government-linked investment companies with strong research and investment skills in managing multi-types of mandates. He holds a Bachelor of Science degree majoring in Business Economics from the Lehigh University, Pennsylvania, USA, and is a holder of the CMSR license. Let's start the first question. After a strong start to the year, the markets have experienced significant selling pressure in July and August. I'm sure that Ten would agree to that. And this includes notable declines in the US and Asian markets, with Taiwan, China, Korea, and Japan seeing even larger drops. What are the underlying reasons for this downturn, and which market has the greatest potential for a rebound in this situation? Over to you, Dan.
Good afternoon, everyone. Thank you, Kim, for the kind introductions. All right, my pleasure today with this particular forum from Maybank Asset Management as well, CIO. All right. Regarding the recently sell off and the rebounds that are happening in the market, I think they started somewhere around 5th of August. There's something we call it as a carry trade. In a nutshell, it means that in Japan, they have a historical very low interest rate environment, close to around 0%, and that is where the global investor, they have this particular carry trade, which means that they borrow the loan from the very low interest rate environment in Japanese terms, and that's where they started to pour a lot of this investment into the global economies like tech stocks, technology stocks, US equities, semiconductor sectors, and so on. So this is what been happening. So part of the reason that have been driving the global equities. And when the Bank of Japan decided, start to normalize their interest rate environment by starting to increase the interest rate for the second time, right? And to 0.5%. And that is where it causes some nervous into the market that some of the participants in the investor in the market that has been selling down their global exposure and started to piling back into the so-called the Japanese yen, right? And that's where that we see the currency movement also has been a bit aggressive. But what it's the most important thing that we noted, I think, is that from this particular event, there's always this advice, right? Try not to be panicked when there is a short-term volatility or short-term nervous into the market, especially for retail client. And because what we have also seen that market gradually started to rebound and recovery is on the way after the event, because market eventually they feel that, market is not as bad as what is perceived to be, right? And things like that. So that's what happens. Yeah.
If I can just add to Tang point, yes, I have to. I mean, carry trade is definitely one of the trigger point for last week or the early August sell down in the market. But the other factor that has contributed as well to a certain extent is basically the jobs number coming from the US. That basically is a kind of a coincident things when US announced a very poor jobs number and followed by the unwinding of the US carry trades. So that basically led a lot of people panicking about the prospect of US economy. People thought that with a weak job number, US could go into recession. Whereas I think the consensus is still that it will be a soft landing scenario for the US, and that basically helped to create a lot of favor and panic in the market. But as what mentioned by Tank, market has recovered. People gain back their sense in terms of economics number and whatnot. So it's all back on track.
All right. Thanks to Mr. Tan and Encik Ridwan for the summary. So basically, the recent market weakness is mainly due to, like what Tan has mentioned, the unwinding of yen carry trade, and Ridwan has also added the weak job market. And in fact, I think Goldman Sachs at certain point of time also increased the probability of US recession to 25%. Okay, so since there are a lot volatilities, a lot of movement in the markets, back to you, Mr. Tan. Which market has the greatest potential for a rebound in this situation? What's your opinion?
What we have seen is that the market that has been sold off the most is the one that been rebounded the most, right? I think US equity, US global economy, and of course Japanese market is the one that notable, more obvious in these situations. But probably to look at more longer term, meaningfully, which market that we think will have more potential moving forward is that we think Malaysia have a good story to share. If got chance later, I wish we probably can talk a little bit about our domestic economy, what has been happening, and why the KLCA has been a lot more resilient over the past years, right? So Malaysia is one of it. And also global economy in terms of the US equities, we think it still have legs to go. Diversify multi-sectors, not just into one or two single sectors. As this year onwards, we already started to see the performance has largely broadening out into the rest of other sectors besides just technology itself. Yeah.
All right. Encik Ridwan, what do you think about the market? Which market has the biggest potential for the rest of the year or even moving into next year?
Diversification is one of the things that I have to agree with what Tang mentioned just now. The broadening of the market, it is something that we are seeing right now. If we are talking about the market, the global market 24 months ago, it was very narrow and concentrated. That's why you have all these acronyms like FANGs, Magnificent Seven and whatnot. But after the sell-off in the early part of August, we are seeing a lot more participation of fund managers or asset managers into the other sectors that is not related to technology. I think like what we mentioned by Tang, people are now focusing more in terms of the financials number or financial sector, into this utilities to a certain extent, energy to a certain extent. So that is basically positive for the market because that will broaden the investment horizons. And despite weaknesses in the technology, you can also see, the other sector picking up all the slacks from the technology, and this would help the overall market sentiment and overall equity market to a certain extent.
All right, thank you, Encik Ridwan. And since we are on the US market and since we are on tech, probably Encik Ridwan, on top of what you mentioned earlier, how do you see the mega tech sector and the tech industry in general? As we see, semiconductor stocks have experienced a major sell-off since mid-July, driven by sector rotation, concerns over China's restriction, worries about AI demand, coupled with disappointing earnings from Tesla and Alphabet. And this has caused the tech-heavy Nasdaq to lose about 15.8% from its peak to the lowest, while the S&P 500 also dropped from the peak about 9.7% to the lowest point. And of course, now both markets have recovered since then. So how do you see the market direction for the rest of the year, Encik Ridwan?
Again, I would like to emphasize that it is an overcrowded sector, tech, particularly the likes of the Magnificent Seven to a certain extent. So despite overcrowding in the sector, you have to also look at the fundamental itself. These are the sector, or these are the company that continue to generate earnings growth for the next 1 or 2 years. And of course, the focus of all this big tech would be on AI, which is the new growth sector in the technology space. So no doubt about the overcrowding in the sector, but the sector still produce a fantastic or a good earnings growth story for the next 2 to 3 years. So hence we are not surprised of the overcrowding or investors piling into the tech name. But then again, I have to go back to our earlier point between us and myself and Tang. Could also see a broadening of investment horizons outside of the technology sector. So this is one of the area where I believe that it will be very, very positive, and it will be a very sustainable thing for the equity market going forward. Yes, tech is overpriced, overcrowded, but people are starting to see other than tech. So that would be very positive in the next 6 to 12 months.
All right, thank you, Encik Ridwan. I believe Teng just now also mentioned about the broadening of the opportunities for the rest of the market. So would you like to add on more on that particular statement?
I think my statement together with Encik Ridwan is very intact. But to further echo on what Encik Ridwan have mentioned, from technology and especially for technology sectors, today market is looking at not just on the earnings or earnings growth, but they're also looking into the profit, right? The profit is extremely important to look at the actual how much each of these tech firms they've been earning and improving the return of equity for their particular shareholder and investors. So that's probably another one key reason that can further drive the technology sectors in the longer terms perspective. Yeah.
All right. So in summary, we are now actually seeing some sector rotation trends have been happening. Some techs they are actually they are still appreciated by the investors, but of course now investors also start to look at other sectors. I think the small mid caps, even the Russell 2000 in the month of July also up by about 9 to 10% before the sharp sell off. Anyway, since we are talking about fundamentals, right? Apart from the US market, Mr. Teng, which market do you think also has another potential for investors to look at?
Okay, I think just now I did touch on US and Malaysia. With China plus one strategy, also we think the rest of other Asia countries like India also one of the key benefiter. Despite besides Malaysia and Vietnam, so those are the key country market that we have been paying some attention into as well, especially from Malaysia and India from AHM's perspective, and that's on the Asia regionals, right? And on the global perspective, we are more paying attention into the global US exposure, more focused into the large and big cap. We know that the small and mid cap like Russell 2000 indexes performance can be a bit sensitive towards the interest rate cut expectations. But what we are looking at is that probably the large and big cap with higher higher cash buffer, right? And we'll be able to sustain better, even though interest rate is to come by September next month. But by next year, in US overall, we're still at a high interest rate environment compared with pre-pandemic period. And with that perspective, we think the large and big cap with higher cash flow, better balance sheet position could sustain better. Yeah.
All right, thank you, Mr. Tan. Encik Rida, what's your thought on the market apart from just now mentioned about US? Which market has the potential to appreciate further?
I have to agree with them when it comes to US, because there's still a lot more opportunity in the US as well. But our internal global team is now also exploring outside of US opportunity, and I think the two regions that we are looking at currently would be on the European side, because there's going to be some positive development in the European side as well after being in the doldrum for the last 18 to 24 months. We are starting to see some lights at the end of the tunnel in the European space. The other area that we are also exploring is actually Japan. No doubt about it. We know that there will be some opportunity in Japan that we would definitely put some money into. And to a certain extent, other than the tech-centric countries like Korea and Taiwan, we are also exploring India as one of our investment destination. Malaysia is a given thing. I think we will talk about this later on together with Tang when it comes to Malaysia.
All right, so it's quite a balanced approach. We have already we touched on developed market equities. We also briefly took on some emerging market equities as well. But seems that now geopolitics have actually started to somehow overshadow the fundamentals. Probably, arguably, geopolitics remains a major risk, if not the biggest risk to the global financial markets. Mr. Tan, how do you view the situation in the Middle East? And as we approach the US presidential election, what are your expectations for the future relationship between the US and China?
I think the Middle East crisis, the ongoing war, it may not impact the market as what we've seen like it just started October last year. We see the rally within the oil price and as well as gold prices, things like that. And today, I think market has been a little bit more muted on the geopolitical crisis noises from the Middle East. But in the US presidential elections, we think the market still can be a little bit affected or impacted by the key sentiment, because today we look at Kamala Harris from Democrat and also ex-President Donald Trump. Both of them, they are proposing, number one, if you look at it from business perspective, the tax policy are very different from both Kamala Harris and Donald Trump, right? Trump is looking at the more friendly easing of regulation as well as a tax cut for the corporate. But Kamala Harris is probably looking at the more incremental on the corporate tax. But at the same time, she's trying to give back more of the benefit into the welfare of the fellow American, from childcare, from healthcare, and so on. So from that perspective, we think it will drive certain volatility in the market. And having said so, volatility is always means that moving forward in the longer terms, it also can provide an opportunity after the elections is over. Yeah.
All right. Thank you, Tan. Encik Ridwan, do you share the same view?
Yeah, obviously, I have to agree on the part of volatility. If there's a volatility, means there's always opportunity for us to make some money in the market. To touch a little bit in terms of the US presidential election this coming November, I think it's very clear there are certain things that obviously Democrats and Republican, they have their own philosophy and also mandate. It is a close call for now between Kamala Harris and also Donald Trump. But for once, Donald Trump has a precedent case, during his first term. We basically knows that, when the last time when he was in power, he put in a lot of economic measures. He put in a lot of tariff into the pictures. But at the same time, like mentioned by Tang, he's very business friendly. He's pro-business. So on the flip side, Democrats is more of a social party. They will put more emphasis on social well-being and whatnot. And this is not so business friendly to a certain extent. So it will be very interesting to see at the end of November who will be in power, because obviously there will be a change in terms of policies, taxes, tariff and whatnot. To touch on the topic of geopolitics, I think the precedence cases is already there. You know, the world got shocked when Russia attacked Ukraine. So I guess that is the biggest shocker when it comes to geopolitics. The crisis in the Middle East, as long as it doesn't contain outside of what it has been for the last, I think 12 to 18 months, I think people are adjusting to it. Market has already priced in. But nevertheless, if something outside of what it is right now, or it involves another third party or fourth party into the picture, then I guess adjustment in the market will come in, will kicks in, but eventually people will price in all these development, and then I guess that would be the time where volatility will be high, and a lot of people will try to position themselves as per what happened during that time.
All right, thank you, Encik Ridwan and Mr. Tan for the insightful thoughts on the geopolitics side of things. So since the global topics are pretty much covered, let's move on to Malaysia. Mr. Tan, we are in the midst of the earnings season in Malaysia. Which sector do you think is currently reporting or will continue to report strong results?
I think the export sector has some legs to go, as indicated by the second quarter GDP, right? Early estimation is on 5.7, sorry. Then they revised to 5.8, and the actual data coming out is 5.9, right? It's a surprise to the market on the upside. And the other things to look at is I think if you look at overall on the project constructions, property, it has been very robust. I mean, especially on the Klang Valley and as well as the Southern Corridor, right? It has been very busy. Not forgetting our northern part as well, the Penang side, right? So these are the three key areas we've seen. There's a lot of activities ongoing. Of course, a lot more of the attention also has been looking into the Southern Corridor, right? From data centers, properties, RTS, the train, things like that. So it has been very robust. And we think these are the few areas that continue will be able to drive the Malaysia economy moving forward.
All right, thank you, Mr. Tan. So I hear you on exporters, I hear you on Johor and Penang Place. Encik Ridwan, what's Maybank Islamic Asset Management looking at right now?
Okay, to add on to what been mentioned by Tang, the other few sectors that I can add on to would be on the financial side. Although in the Islamic side, but I think the point mentioned by Tang in terms of the surprise to our GDP number, basically clearly showing that the underlying of the economy is moving, and that financial sector will be one of the biggest beneficiary whenever economy is all economic activities are firing all their cylinders. So you may see some lag effect in terms of the bank earnings, but overall I think if the economy continue to be on the growth trajectory and beating expectations, so banks would be one of the sectors that we will continue to put in money. The other part that I would like to highlight in terms of the sector for the next 6 to 12 months would be on the consumer. No doubt, consumer has been unloved for the last 12 months because of a lot of factors, and specifically to Malaysia would be in terms of the inflation threat and also the subsidy rationalization. But you can see from the fundamental point of view, a lot more measures or government has focused more into the rakyat well-beings. And the latest would be in terms of the salary, civil servant salary adjustment. So that's very clear that government is putting their work into the rakyat, well-being of rakyat, and I guess it will be follow suit by the private sector, hopefully, and that would make the consumer sector very, very interesting for the next 12 to 18 months. The other factor that I think will support the overall consumer sector would be on the tourism side. You know, Malaysia has been aggressive when it comes to promoting tourism in Malaysia, and we are also seeing a good pickup number or a good number in terms of our tourist arrival. And this would help, you know, to a certain extent to revive our retail sector, consumer sectors, F&B, because, you know, whenever tourists come to Malaysia, the tourist dollar spent in our country is going to be, it will have a big multiplier effect to the overall economy. So I guess consumer to a certain extent, financial would be what the other sectors that I would like to highlight on top of what we mentioned by Tang.
All right, thank you, Encik Ridwan. So we hear you on the financial sector, which is a beneficiary of the growing economy. We also hear you on consumer sectors. You know, recently we have EPF withdrawals and whatnot, government, you know, civil servant hike, salary hike, and coupled with the tourism activities, I think Malaysia will continue to do well. In fact, I think if the investors have position in Malaysia since beginning of the year, that would have benefited from the rising performance in the market, and coupled with recently, you know, ringgit has also been very, very strong recently. I think as of now, it has actually performed better against most of the major currencies that we monitor year to date, including the US dollar, the British pound, you know, euro, and some of the ASEAN currencies and whatnot. So, Mr. Teng, what drives the ringgit outperformance, and how do you see the ringgit performing in the near future?
We really come from a long way, right? A low base. Of course, interest rate differences also is one of the reason. With the markets expecting the US is to cut interest rate moving forward by end of the quarter or fourth quarter of this year, then will narrow the gap of the interest rate and Malaysia OPR of 3%. And that is one of the area that driving the Malaysian ringgit strengthening. And the other reason is also because of the interest from the foreign investment, the inflow. We see more and more activities of inflow on a weekly basis that has been reported. And we also suspect that, you know, with the momentum that the KLCI able to continue much longer, that eventually will start to attract more foreign investment to pay more attention into the Malaysia market. So in that sense, the Malaysian ringgit also could be well positioned or priced in with that forward expectations. Yeah.
Thank you, Mr. Teng. So I would like to concur what you have mentioned earlier, that the ringgit recent strength is basically driven by the interest rate differential and coupled with the demand for the ringgit in terms of the investments side of things. So, Encik Ridwan, what drives the ringgit outperformance, and how do you see ringgit performing in the near future? Do you share the same view with Mr. Teng?
Yeah, I think Tang has mentioned everything that is possible supporting our ringgit. But the other point that I would like to mention is because it is on the growth side lah. You know, a lot of expectation in terms of US economy going forward. People are basically putting a probability that, you know, there could be a slowdown or a soft landing in the US, which means that, you know, US might not grow as robust as it used to be for the last 2 to 3 years. But on the opposite side, on the flip side, Malaysia really surprised in terms of the GDP growth. So the differential between the US GDP now or going forward versus Malaysia, that would clearly shows that, you know, we are on the good growth. There is a good growth story in Malaysia, and growth investors will particularly take attention of that, and maybe to a certain extent perhaps move money from developed country, the likes of US, Europe, to a certain extent into a much higher growth country, for example Malaysia and some other emerging countries. So that would create demand for equities in Malaysia. And when there's a demand in equities in Malaysia, like it or not, you have to buy our FX as well. So that would be the additional point that I would like to highlight.
Okay, finger crossed, Malaysia market and ringgit will continue to perform. I think Bank Negara Malaysia has also been asking the exporters to convert their foreign currency back to ringgit to support the demand for ringgit. So before we end the session today, Mr. Tan, could you share some of the products offered by AHAM Capital that can help investors navigate the evolving investment landscape, then followed by Encik Ridwan. Over to you, Mr. Tan.
On the global fund, I think it's good to stay diversified. Large big cap is recommended. Aiman Global Equity Fund is our Sharia Islamic global equity portfolio with a diversification across multi-sectors in the large and big cap in US. So Aiman Global Equity Fund is the recommended for the global portfolio. As for Malaysia, we can look at the AHAM Select Dividend Fund or AHAM Select Opportunity Fund. Those are also the large and big cap focusing into the Malaysia multi-sectors. We have financial, industrials, construction, property, healthcare, and so on. So those are the portfolio that I think will have more longer-term trajectory when it comes to the performance. Yeah.
All right, Encik Ridwan, from Maybank Islamic Asset Management perspective, what are the products that you think can help investors navigate along this bumpy market?
I would have to go by basket. If you are a risk-averse investors, for Malaysia, I will always go for the balance fund. Because balance is one of the product that can have the flexibility in terms of shifting asset allocation from equity to fixed income, and it is very crucial because at this juncture when the talk about rate cut has started, so flexibility in terms of moving asset allocation would be very, very crucial, and this would suit a much more risk-averse type of investors. But if you are a high risk type of people, of course, growth is one of the product that we would definitely recommend to investors. So we have the Growth I, the Growth Islamic, and the Growth Conventional, which focuses a lot more into the growth company as a portfolio structure. And of course, when you talk about other than Malaysia, we also have products that cover Asia Pac, ex-Japan, and we just launched our global product. So that basically gives a good perspective when it comes to the product that we have. At the end of the day, it depends on what kind of investors you are. Are you a risk taker? Are you a risk on or risk off? So, but at the end of the day, we do have products for every types of investor that we have possibly.
All right. Thank you, Encik Ridwan. So I think given the size of the company, like AHAM Capital or even Maybank Islamic Asset Management, there are a lot different kinds of product offerings offered by the organizations, whether it's for risk-averse type of investors, whether it's for risk taker. I'm sure that AHAM Capital and Maybank Islamic Asset Management could, meet your investment objectives and help you to achieve your investment goals for the longer term. All right, I think we can wrap our session. Thank you so much to Mr. Tan Chi Siong from AHAM Capital, as well as Encik Muhammad Ridwan Jasmine from Maybank Islamic Asset Management. And we also like to thank to the audience for dialing in today. Stay tuned for the next Phillip Roundtable. This update is brought to you by Phillip Capital, your partner in finance. Thank you so much.